Hey everyone, welcome back to the Deep Dive. Today we're diving into Cipla's Q1 FY26 earnings call. It dropped July 25th, 2025. Our job, like always, cut through the noise, find the important stuff, and basically tell you what really matters from this pharma giant's latest quarter. Think of it as, your quick guide to understanding what looks like a pretty big strategic shift happening over there. All right, let's just jump right in. Headlines. What were the big numbers for Cipla's Q1 FY26 that, really stood out?
Well, the revenue definitely caught my eye. 6,957 crore, strong number. And profit after tax came in at 5,298 crore. Their EPS, the earnings per share, landed around 16.200. But honestly, beyond those top figures, it's the operational strength underneath that's pretty compelling.
Yeah, operational strength, like what specifically?
Well, the EBITDA figure was 1,778 crore. That's earnings before interest, taxes, depreciation, amortization. Basically a key profitability measure.
Yeah.
And that gives them a really robust margin, about 25.6%. And here's something interesting. The gross margin was 68.8%. That's actually up 156 basis points compared to last year.
Wait, 156 basis points? So like 1.56 percentage points higher. Why was that?
Exactly. It was largely down to, a better product mix, selling more profitable stuff, essentially. Plus, you look at their cash position, super strong. Net cash of 10,379 crore against barely any debt, just 459 crore.
Wow. Okay. So financially, very healthy. Lots of firepower.
Definitely indicates that. Loads of flexibility.
Right. So let's unpack that performance. Let's dig into the operations and strategy. How about we start with the One India business? That's their home turf, right? The engine room.
Yeah, exactly. The integrated domestic business. It grew 6% year over year, and quite a milestone, actually. It crossed the 3,000 crore mark for the first time ever in one quarter.
3,000 crore in India alone. That's huge. It's like 44% of their global revenue now.
It is, yeah. 44%. But there's been a nuance there. While that headline growth is impressive, the overall picture was, let's say, slightly dampened by slower performance in a couple of key therapy areas.
Which ones?
Respiratory and anti-infectives. Now, these make up almost 30% of their branded prescription business in India. And according to IQVIA data, which is, pretty much the industry standard, the market for those segments only grew about 5%.
Ah, okay. So the market itself was a bit sluggish there. Or was it Cipla specific?
Management pointed to seasonal factors, but also, interestingly, a strategic realignment. They made some changes earlier in FY25, sort of preparing for future therapies, especially these triple combination products.
So maybe sacrificing a tiny bit of growth now to set up for bigger things later, like higher value combos.
That seems to be the thinking. It shows they're looking ahead. And they sounded pretty confident, actually. Said they expect the India business to grow, in line with the overall market for the rest of the year, the next 3 quarters.
Okay, makes sense. Positioning for the future. Let's switch gears then. North America. Always critical. What happened there?
So the U.S. business brought in $226 million in revenue for the quarter. And they really hammered home this point about diversification in their U.S. revenue.
Diversification. How so?
They broke it down roughly into thirds. About a third comes from their own U.S. facilities, another third from their manufacturing back in India, and the final third from strategic partners.
Okay, spreading the risk. Did that translate into new products hitting the market?
It did. They launched 2 important ones in Q1, Nano-Paclitaxel and Nilotinib.
Oncology focus there, complex generics.
Exactly. Strengthening their hand in complex generics and cancer treatments.
Right.
But here's what I think is the really big news, a clear signal of that strategic pivot we mentioned. Cipla signed an agreement for its first U.S. biosimilar, and they expect to launch it pretty soon, in Q2 FY26.
Their first U.S. biosimilar. Wow, okay. That is a big step, not just generics anymore.
Definitely a move up the value chain.
So what does all this, the diversification, the new launches, especially the biosimilar, what does it mean for their U.S. sales ambitions? They talked about getting closer to $1 billion in U.S. sales by FY27. That sounds, ambitious, especially with price erosion on stuff like Revlimid, right?
It is ambitious, no doubt. And yes, Revlimid generics are facing that pricing pressure. It's a real headwind.
So how do they bridge that gap? Is the pipeline strong enough?
That's the billion-dollar question, isn't it? Management is really banking on the upcoming pipeline. They highlighted several key launches expected soon. Generic Advair, for instance, hopefully in the second half of FY26. Also mentioned 2 or 3 peptide assets coming this year.
Peptides. Those are complex, right?
No.
Higher value.
Generally, yes. Often injectables, trickier to make than standard pills. So higher value. And then other key respiratory products like generic Symbicort. The idea is that while Revlimid prices might fall, these new higher margin products will cushion the blow and ideally drive that overall growth towards the billion-dollar target.
Okay, so it's a strategy of offsetting generic erosion with newer, more complex launches, a bit of a balancing act.
Precisely, a strategic balancing act.
And how are things looking outside of India and the US? What about the rest of the world?
Pretty solid, actually. The One Africa business grew 11% year on year in US dollar terms. Within that, South Africa grew 6%. And their EMEU business, that's Europe, Middle East, emerging markets, managed 8% revenue growth in dollar terms.
That's decent, especially with, all the geopolitical stuff going on.
Right. Despite those headwinds, it shows the value of that global footprint. It provides stability. Oh, and they also flagged supply chain resilience. Their China manufacturing plant is apparently running full tilt now, which is helping boost supply, particularly for North America.
Good to hear on the supply front. Now, regulatory updates, always a potential worry. Any red flags from the FDA?
Actually, some relatively good news there. You might remember inspections at their Kundame Goa facility and Scitech labs in Navi Mumbai back in Q4 of FY24. Well, during this quarter, the FDA classified both of those inspections as VAI.
VAI, voluntary action indicated. What does that actually mean for investors? Is it good, bad, neutral?
Think of it as, okay, not perfect, but not disastrous either. It means the FDA did find some issues, some objectionable conditions, as they put it. But crucially, the agency isn't planning immediate regulatory action like warning letters or import alerts.
So Cipla needs to fix things, but it's not an emergency shutdown situation.
Exactly. It's a signal that things need addressing, but it provides more clarity and suggests no major disruptions are imminent. So mostly a positive sign, removing some uncertainty.
Okay, VAI means fix it, but no immediate crisis. Got it. Let's shift focus now, look ahead. The future, and you can't talk pharma future without mentioning GLP-1s, right? The Ozempic, Wegovy class of drugs, huge market. What's Cipla's plan there?
They see GLP-1s, glucagon-like peptide ones, as hugely important strategically. Paramount, I think was the word used. Their goal is ambitious, and they're among the very first wave of launchers for these drugs in various markets.
First wave, that's aggressive. How?
They did clarify, not the absolute first wave everywhere, like for Canadian launches, for example. But they're tackling it with a hybrid strategy.
Yeah.
Making some parts themselves, partnering for other parts of the value chain. It's quite pragmatic. Their basic belief is this market is going to be massive, and they want a piece of the action across the whole category, not just pinning hopes on one specific drug.
Spreading their bets within a potentially huge market. Makes sense.
Yeah, a broad approach.
And sticking with the future, what about their longer-term strategy for biosimilars? We mentioned the first U.S. launch coming up, but what's the bigger picture?
They're definitely committed long-term. So besides that first one coming via a partner soon, they plan to bring in a few more through partnerships in the near term. But they're also developing their own biosimilar assets in-house, though those are further out, expected around the 2029-2030 timeframe.
So a mix of partnering now and building their own pipeline for later.
Exactly. And they're backing it with cash. They've put over $100 million into a joint venture just for biosimilar development. Management also seemed quite optimistic about the changing regulatory landscape.
How so?
Well, things like potentially reduced requirements for big phase 3 studies that could speed things up, make development more capital efficient, almost making biosimilars look more like complex generics from an investment return perspective. Plus, the idea of interchangeability getting easier, where a pharmacist can just swap the biosimilar for the original brand that could really smooth market access.
Okay, so biosimilars are a serious long-term strategic pillar for them.
Absolutely. It complements the move into complex generics perfectly.
And tying this all together, R&D spending, profitability, are they investing enough to fuel all these ambitions? And what are they guiding for the full year?
They are putting money behind it. R&D spend in Q1 was 432 crore. That's about 6.2% of revenue.
Okay, 6.2%. That's a decent chunk.
Yeah, and it's clearly aimed at building that pipeline we've been talking about. What's impressive is, even though they saw slightly slower growth in India and the US this quarter, they actually beat their internal EBITDA targets.
Really? Despite the headwinds?
Yep. Which, speaks volumes about their diversified model and just solid execution across the board. And looking ahead, they kept their full year FY26 EBITDA margin guidance unchanged, 23.5% to 24.5%.
So they're confident they can maintain profitability even while investing and navigating some slower spots?
Seems so. Signals confidence in delivering, quality earnings even if demand isn't booming everywhere.
Okay. And the market reaction. How did investors take all this news?
So the market loved it. Cipla shares jumped about 6% over the 2 trading days after the results came out, hit 1,575 on the BSE.
6% jump. That's pretty strong. What's the signal there?
It signals clear bullishness from analysts and investors. You saw firms like Antique, Nuvama, Choice Broking. They all upgraded ratings, raised their price targets. It suggests the market's belief in this transformation story, this pivot towards higher value areas, outweighed any slightly cautious comments from management about margins or specific segment speed bumps.
So the street is buying into the long-term vision.
It definitely looks that way. They see the strategic shift and seem convinced Cipla can execute.
All right. Now, before we get into trade ideas, the usual reminder, this is purely for informational purposes. It is absolutely not financial advice. Investing carries risks. Please always do your own research.
Got it. Standard disclaimer applies.
Yeah.
Okay, so thinking about a trade idea for the, let's say, sophisticated investor looking beyond that initial pop, here's something maybe a bit outrageous, but potentially plausible.
Outrageous but plausible. I like it.
Given that the initial rally might have priced in some of the immediate good news, maybe think longer term, like a multi-year conviction play focused squarely on Cipla's GLP-1 and proprietary biosimilar pipeline.
Okay, so ignoring the near-term noise and betting on the really long game.
Exactly. The first U.S. biosimilar is soon, yes, Q2 FY26. But their own assets are way out in 2029-30. That's where the real transformative potential, the optionality might lie. The outrageous bit is betting this pipeline fundamentally re-rates the whole company, transforms it from just a top generics player into a true specialty pharma name, justifying a much higher valuation down the line.
And the plausible part?
Well, the sheer size of the GLP-1 market is undeniable, and Cipla is making significant strategic investments, plus those potential regulatory tailwinds for biosimilars we discussed. So, look, this isn't a quick trade. It's betting on long-term execution in very complex areas.
How would someone even structure that hypothetically?
For someone comfortable with it, maybe long-dated call options, gain exposure to that potential future upside without tying up huge amounts of capital today. But again, high risk needs careful consideration. The whole idea hinges on Cipla becoming even better at executing in these really tough, high-barrier markets.
Interesting. A long-term bet on transformation. So, wrapping this up, what's the big picture takeaway from this Cipla quarter?
For me, it really highlights this pivotal moment for Cipla. They're actively evolving, right? Moving from that reliable generics foundation towards being an innovator driven by its pipeline. The focus on complex generics, oncology, and particularly those long-term bets on biosimilars and GLP-1s, it really sets them up for potentially a very different growth path over multiple years.
Yeah, it feels like a company really trying to shape its own future.
Which leads to the big question, doesn't it? Will their execution stay sharp enough? Can they navigate the U.S. pricing pressures, successfully launch these new complex products, and actually hit that ambitious $1 billion U.S. sales target by FY27? Can they truly reshape their growth story? That's definitely something worth watching and thinking about.
Absolutely. A compelling story unfolding. We hope this deep dive into Cipla's earnings has given you some valuable food for thought. Thanks so much for joining us for this analysis. As always, we encourage you to keep digging into these fascinating market dynamics yourself.